Welcome to Smart Stock Watch. Today is January 31st, 2025, and we're diving into OneMain Holdings' latest earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. OneMain Holdings, a leader in providing non-prime consumers with responsible credit access, has just released its Q4 2024 earnings. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the top line. OneMain Holdings reported total revenue of $1.5 billion for Q4 2024, up 9% from the previous year. John, what are the key drivers behind this growth?
The revenue increase is primarily driven by higher interest income, which rose to $1.3 billion, an 11% increase from last year. This growth is attributed to higher average net finance receivables, reflecting the company's strong lending activity.
And how did this impact their profitability?
Despite the revenue growth, net income for the quarter was $126 million, down from $165 million in the prior year. The diluted EPS was $1.05, reflecting increased interest expenses and provisions for finance receivable losses.
EPS performance and analyst expectations. OneMain Holdings reported an adjusted EPS of $1.16, surpassing the analyst forecast of $1.12. John, what does this tell us about the company's performance?
This is a positive indicator. Beating the EPS forecast suggests that OneMain is effectively managing its operations and costs, even in a challenging economic environment. It reflects their ability to generate higher earnings from their core business activities.
How many analysts were surveyed for this forecast?
The forecast was based on a survey of 8 analysts, which adds credibility to the beat, showing that OneMain exceeded broader market expectations.
Operational efficiencies and future outlook. Moving on to operations, OneMain's managed receivables grew to $24.7 billion. What does this signify for the company's future?
This growth, up 11% from last year, indicates strong demand for OneMain's credit products. It positions the company well for future profitability as they continue to expand their loan portfolio.
And what about their strategic initiatives like dividends and share repurchases?
OneMain declared a quarterly dividend of $1.04 per share and repurchased 75,000 shares for $3 million. These actions demonstrate their commitment to returning value to shareholders and confidence in their financial stability.
Risks and challenges. Let's discuss some of the risks and challenges OneMain faces. Their interest expense increased to $310 million. How does this impact their financial health?
The rise in interest expense, up 15% from last year, is due to increased debt to support receivables growth. While this is a concern, OneMain's improved delinquency ratios and strong liquidity position help mitigate these risks.
What about their high debt levels?
With $21.7 billion in debt, managing this liability is crucial. However, their liquidity resources, including cash and undrawn credit facilities, provide a buffer against potential financial strain.
Key takeaways. In summary, OneMain Holdings delivered a solid performance in Q4 2024, with an adjusted EPS of $1.06, beating expectations. Their revenue growth and strategic initiatives like dividends and share repurchases highlight their commitment to shareholder value.
Absolutely. Despite some challenges, OneMain's strong operational performance and positive outlook for 2025 make it a company to watch. Their focus on profitable growth and credit management is commendable.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on OneMain's performance in the comments below.